Blackstone is a financial behemoth that has long been accused of rigging the world in accordance with its plan to profit, and this strategy has always revolved around property. Blackstone buy up as much real estate as they possibly can. They take out hundreds of billions of dollars worth of loans at rates cheaper than any individual has ever had access to in American history, and they buy your home. They dominate this market because it's just not physically possible for ordinary people to compete with these trillion-dollar institutions, and we've known this for a long time. And about 2 months ago, I put out a video exposing how this has started to go wrong for Blackstone. Their flagship fund, the Blackstone REIT, has had a bank run on it back in November where investors tried to run for the doors, and Blackstone had to resort to just saying no. No, you can't have your money back, we're putting a lock on it, and you're just going to have to sit tight and hope things end up okay. Some people said that was the end of it. They said Blackstone would be fine, the housing market would be fine, and that I was making a big deal out of nothing, but I really wasn't so sure. And it turns out that I was 100% absolutely correct, because in the few months since that video was released, things have gotten far worse for the housing market, but for Blackstone as well, as they have suffered another bank run and have now even defaulted on their debt. And that's only the start. Now, if this is news for you, then you have to wonder why that is. Why is the mainstream media specifically not reporting on these events, which are eerily similar to what happened in 2008? And how on earth are you supposed to invest while the entire legacy media block and political establishment is rigging everything against you? And if that is the case, then you need to look out for Stoic financial freedom, because it's the only way I can guarantee you don't get taken for a ride by these corrupt bankers all over again, but more on that later. So what exactly is going on here? Well, Blackstone is a titanic financial institution that controls $1 trillion in assets under management, and their customers are billionaires and bankers, but also 31 million ordinary Americans who likely don't even know they are Blackstone's customers. These people are simply invested into a pension scheme, but that scheme is secretly run by Blackstone, usually without them even knowing it. Now, their flagship product is a REIT, or a real estate investment trust, which just buys up property and rents it out, and currently has $125 billion worth of assets and over $55 billion worth of debt. A couple of months ago, we started getting warning signs that things aren't going so well inside this REIT, as Blackstone sent out a letter to their investors explaining that they are seeing a few problems. They essentially told their customers that they were halting all investor redemptions, that these people would no longer be able to take out their money no matter how badly they needed it. Now, this was back in November, and as I said earlier, I released a video explaining all of that, and the media was pushing the typical line that this isn't a real problem and it's entirely overblown. But then December came around and the exact same thing happened again. Blackstone kept their doors shut and held their fists tight around their cash, refusing to give it to its rightful owners. January came next, and once again the doors to Blackstone remained firmly closed, and then finally February reared its ugly head and the doors still refused to budge. For 4 straight months now, Blackstone has seen its REIT, its most important investment product, fail to the point where their only possible solution is to just close up shop, clasp their hands over their ears and chant, "We're not listening." For 4 straight months, Blackstone has essentially been suffering from a sustained bank run that has no end in sight whatsoever. But this is where things get seriously bad, because while the bank run is hardly ideal, Blackstone have it written into their contracts with every single client that they're allowed to do this if they want, and there's nothing their customers can do about it. Failing to repay a loan, though, that's an entirely different story. That is a default, and that is something Blackstone can't just hide away from or ignore outright. Unfortunately, that is exactly what has just happened as well. Blackstone just defaulted on a $562 million bond that's backed up by a huge portfolio of European stores and Finnish offices. They sought an extension on their debt because they realized they were incapable of actually paying out what they own, but bond holders decided not to allow it, to call Blackstone's bluff and try to make them pay immediately, as they are legally required to. But the problem is, Blackstone just can't pay it because they just don't have any money left. As we would expect, Blackstone are pretending this is all a non-issue and that this debt relates to a small portion of their portfolio, and that they're disappointed that the servicer did not advance their proposal, which reflects their best efforts. They're trying to gaslight the world into thinking they don't have any problems, but the truth is finally starting to get out, and it doesn't look good at all. Blackstone's claim is that this doesn't really matter because it's such a small part of their portfolio, so all is well. But if it's such a small and insignificant part of their portfolio and the rest of their portfolio is going very well, Why don't they simply just pay off the debt? And if the entire fund defaults, as has now officially been declared, from a tiny part of their business, what is going to happen to the major part of the business when their major investments start to go under too? Now, in literally the same Bloomberg article covering this default, it's noted that this default has stemmed from the European property market, but the valuation drops in the United States have been far more severe, so how on earth is Blackstone expected to survive while its American properties crater in price by even more? Blackstone is falling apart as we speak, and the impacts are going to be massive. They have already officially defaulted, and there are 31 million American pensioners relying on Blackstone for their retirement every single month. And the institution is just saddled with billions of dollars of debt and assets that are falling in price, putting them on a collision course with a total and utter collapse. It's no surprise then that investors are struggling these days, with the vast majority of people losing money over the last year, and with the amount of debt plaguing our economies, interest rates hiking and inflation staying stubbornly high, we are going to see a recession and asset prices are going to continue to get hammered. But thankfully, the digital age allows us to invest in myriad different ways and to actually profit from all of this market turmoil, to turn a bear market into a once-in-a-lifetime wealth-building opportunity, but only if we truly understand what's going on. This is exactly what I've done, and you can literally go back on my YouTube channel to see the previous video I made about Blackstone 3 months ago, predicting that the company would continue to slide and eventually default, and that is exactly what has happened. And now I've created Stoic Financial Freedom, a framework and course to give back to you and show you how to invest like I do. You'll get access to over 50 individual lessons revealing to you how the world really works, how markets and risk determine your wealth, and how emotions are the one thing holding most people back. But most importantly, you'll learn how financial stoicism solves all these problems. On top of that, you'll get VIP access to our Stoic Finance Discord and the ability to speak to myself and hundreds other like me to hone your investing skills and build your own wealth even as these trillion-dollar institutions fall apart. And finally, as a special thank you for helping me build Stoic Finance all these years, I've put together a condensed version of the course tailored specifically towards investors and my viewers at a fraction of the full price, so click down below to learn more and join Stoic Financial Freedom. Now, unfortunately for Blackstone, my offer doesn't extend to them, but it looks like they could seriously use the help because things just get worse from here on out. It seems likely that Blackstone management have actually been lying to their investors about what is actually going on behind the scenes. Over the last 6 years, Blackstone's REIT has outperformed every other REIT in the world, despite the fact it's so large it really is no different than any other competitor. When you're investing $1 million into property, it's easy enough to find the best possible opportunity and only invest into that point, but when you're investing $125 billion into property, it's simply not possible to pick and choose only the best projects, so all of these REITs see their returns mirror each other at this scale. That is, all of these REITs except one, Blackstone. It turns out that Blackstone have been providing huge returns to their investors because they get to decide how they value their property holdings. Every quarter when they speak to their investors, they get to choose how they value their assets, and there is no real market to compare these levels to because we are often talking about a single billion-dollar building, not something as liquid as stocks trading on the NYSE. So if Blackstone say that the building they bought for $1 billion in 2019 is worth $2 billion today, then that's what they tell their investors, and there is no governing body to check that these valuations are accurate. Over 2022, commercial property prices rose by about 8% across the entire American country, but Blackstone claimed their property values increased by 13% in 2022's year-end stockholder letter that has now mysteriously disappeared from the company's website. Blackstone is a private company, so we don't know what goes on behind those closed doors, but they have claimed incredible returns over recent years, and despite those incredible returns, they are now suddenly unable to pay off their debts, leading to them literally defaulting, so it's no surprise that rumors of fraud are starting to circulate this behemoth. And the optics for this all just continue to get worse because it turns out that Blackstone paid out its CEO and founder Steven Schwartzman a record $1.27 billion just a few weeks before the company suddenly couldn't afford to pay out $562 million in debt that it owes. It really does seem that 2008 is happening all over again, with bankers getting rich while their investors, the 31 million American pensioners who have unknowingly placed their capital in this man's pocket, are going to be left out of pocket. And things are only going to get worse from here on out because this entire industry is starting to show serious signs of struggle. We already know that property prices are falling, and we already know that this entire market is embroiled in trillions of dollars worth of debt. Funnily enough, just like what we've seen happen with the Chinese housing market over recent years. And companies in the US are starting to default on their debt too, because Blackstone isn't the only one in trouble. Pacific Investment Management Co. and Brookfield Corp. have also defaulted on their debts after property prices fell, and they're worth $3.9 billion and $14 billion each. We're seeing a squeeze from both sides where demand for real estate is dropping from weak economic data at the same time as interest rates are soaring, with residential mortgages rising above 7% earlier this month. It is simply not possible for these asset prices to maintain the same values they had at 0% interest rates once interest rates rise above 7%, and the Federal Reserve is still hiking rates because inflation is not over. Now at this point you are probably asking yourself the question, what is going to happen next? What is going to happen next? And I'd like to give you a direct quote from the video I made about Blackstone's initial problems months ago. Blackstone isn't going to crash the economy, but when the economy does crash, Blackstone just might fall with it. It seems that everyone speaking about this issue today is trying to claim that Blackstone is a Lehman moment, or it is totally fine and there are no problems at all, but the reality is somewhere in the middle. Blackstone alone crashing is not enough to crash the entire global economy, but it doesn't need to be the sole reason for a crash when there are 100 other reasons out there too. Blackstone's failings are just a single piece in a massive pie of failure. We have the property collapse not only in the United States, not only in Finland with Blackstone's default, but across all of Europe and China as well. We have monetary tightening going on all over the world at once, at the same time as inflation is a worldwide problem too. The 10 to 2 year yield curve, one of the most reliable recession indicators the world has ever seen, has not been this inverted since the 1980s, when bond yields went wild as inflation and interest rates reached close to 20%. Let me just say that again, the yield curve inversion has not been this pronounced for over 40 years. Not during the dot-com bubble, not during the global financial crisis, and not during the COVID crash either. A recession is guaranteed here, and sadly it seems that we will be the ones to lose out. Blackstone CEO and founder Schwartzman took home $1.37 billion last year, which is now cash in his pocket, and you can best believe he isn't putting that into his dying funds. But those 31 million American pensioners will have no such luxury and will be forced to watch their investments wither away and die as the entire economy enters a depression and we see a second global financial crisis. And with the size of these financial behemoths, the chances are that Blackstone will be deemed too big to fail, and the taxpayer will be forced to come in and save these corrupt bankers from their lies and fraud. The simple fact is that we are up against it, and it is far more difficult than it should be to work out what is really going on, to find out which of these narratives are true and which are being directed at us by the legacy media in an attempt to keep our assets tied up while the ultra wealthy sell out and save themselves. Stoic Financial Freedom, my new course, is specifically created to make this all clear, to reveal what is really going on and how to ensure you don't lose money during this coming crash, but even are able to make money. We just recently released a more focused version that is specifically tailored to Stoic Finance viewers, investors, and your needs above all else, and at a fraction of the full price. So click the link down below in the description to join Stoic Financial Freedom. Or if you just want to see why these billionaire elites are predicting another black swan crash, watch this video here.